this video I'll be taking you through the concept of taxation of small business taxpayers. So a small business taxpayer is someone whose gross turnover in a year, for example, is from 5 million to 150 million shillings. So every business which earns within that range of income is categorized as small business tax business. So this small business taxation was derived to provide for people in small businesses who ordinarily cannot hire the services of a professional accountant to prepare final books of account or to prepare audited books of accounts. So it is provided for under the income tax has presumptive tax. So presumptive tax is that tax for small business taxpayers. A small business taxpayer is a resident person for the purposes of income tax whose gross turnover from all businesses exceeds 5 million but does not exceed 10 million shillings. So if a business, for example, a restaurant, a saloon, a PlayStation, any small business which earns gross turnover between 5 million and 150 million is categorized as small business and qualifies for presumptive tax. So this is excluding businesses such as architectural services, professionals like medical practitioners, accountants and auditors, professionals like dental services, people in public entertainment services, for example, musicians and artisans, are not required to file presumptive tax because they are categorized as professionals. So they ordinarily file provisional tax and final income tax under the Income Tax Act and are charged based on the chargeable income. So presumptive taxpayers are required to keep records because the rates for people who keep records are different from those who do not keep records. For example, if a business earns less than 10 million, they pay a nil tax, meaning they don't charge them income tax. Income tax is tax charged normally on profit, but for presumptive taxpayers, they charge them tax on total sales, what they call turnover. Yes. So if your total sales in a year of income are between 10 million and 30 million, you're charged 0.4% of annual turnover in excess of 30 million or 80,000 per annum. Yes. So if, for example, your business or a workshop or a carpentry shop or a welding workshop earns between 30 million and 50 million, you will be charged tax of 0.5% plus 180,000, 0.5% plus 80,000 of 0.5% of annual turnover plus 80,000 of an amount in excess of 50 million or 200,000 if you don't keep records. Yes. So if someone keeps records, if the annual turnover is between 50 million and 80 million, they charge them 0.6% plus of annual turnover in excess of 50 million plus 360,000 or 400,000 per annum. If a business earns between 80 million and 150 million, they charge them 0.7% of annual turnover in excess of 80 million plus 360,000 or 900,000 per annum if you don't keep records. So if you don't keep records, the charges are higher for in most cases for those who don't keep records. And also if you keep records, it is easy for you to overcome the inspection by URO officers if they come to your business. And there is also a final point on election to opt out of presumptive taxes. They say that a small business taxpayer may opt out of the presumptive tax system